This is the Asia Trade. I'm Paul Allen in Sydney.
I'm Avril Hung in Singapore. Your top stories this hour. Asian stocks set for a cautious open as big tech slides, with investors rotating into energy and consumer stocks. A global bond advance is stalling ahead of Friday's U.S. jobs report. Rio Tinto shares in focus as talks resume with Glencore on combining to form the world's biggest miner. And Bloomberg learns that China plans to approve imports of Nvidia's H200 chips as soon as this quarter, renewing access to a critical AI market. Let's take a look at how Asia is faring in the early parts of the session. Australia is picking up just a slight bit. We, of course, will be watching the shares of the miners. And against the backdrop of what we saw in the U.S., it was a pretty mixed close. The question marks surrounding the stumbles in big tech. Is this just a part of the market looking for direction or something more worrying, especially when we see the rotation into some of the value names as well as the smaller cap stocks? That is the handover for the Asia session, and Nikkei futures are showing us a bit of softness already after the declines, the stumbles in the past two sessions. And we are seeing, though, some of these outliers, of course. This week it's about the energy defense related stocks in Asia. So we'll see if that continues. We also have some data out of South Korea showing us for the month of November, the goods trade surplus widened to $13.3 billion, and the current account surplus also widened to $12.23 billion. Paul?
All right, let's take a look at how U.S. stocks fared. Very much a mixed picture again. The S&P ending flat. Small caps did catch up, rallying pretty strong, though. We saw defense stocks surge as well. And while tech didn't have a great day, Google did have a good day. It edged past Apple now to be the second largest company on Earth. The Nasdaq, though, broader index sliding by about 0.5%. Yield on the 10-year crept up again. A lot of interesting data for the Fed to parse here. U.S. inflation expectations remain pretty strong, according to the New York Fed survey. However, the Atlanta Fed GDP tracker shows strong growth, and we're going to get a non-farms payroll report tomorrow, U.S. time. The unemployment rate seen ticking down, so it really does underscore the challenging debate for the Fed going forward in 2026. Stephen Miran, the Fed governor, calling for 150 basis points of easing now this year. Crude prices seeing a bit of a jump, up 1% for New York crude. We'll have 20 oil executives meeting President Trump on Friday in the U.S. to discuss the rebuilding of the Venezuelan oil sector. The U.S. Energy Secretary Chris Wright, meanwhile, saying China is not going to be cut off from Venezuelan oil. Avril.
Paul, let's bring in our executive editor for Asia Markets, Paul Dobson. I wonder what you make of the moves overnight in the U.S. I mean, Paul was just talking about, the other Paul was just talking about some of the data that's coming through and how strong it looks on the U.S. economy. How is that affecting trade? What's that going to mean for Asia?
Yeah, so it's interesting dynamics, isn't it? Because actually, you know, that stronger data isn't necessarily good news for markets if it means that people are counting out the chances of the Fed cutting interest rates sooner in the first half of this year than they would otherwise. And so the market has been kind of fluctuating a little bit based on those Fed bets and estimates. But I think that there's also this secondary factor, this rotation, people taking some money out of the big tech, as Paul was describing, and put it into the small cap sector. And I think that that speaks to more general economic optimism, actually, that's out there. If the small caps, which have been kind of underperforming for quite a long time now, are gaining momentum, then it tells you that people have a view that the economy is going to fare well, that companies are going to be able to boost their profits, all other things being equal as well. So, and I think that if you look at the global picture at the moment, you know, it's a bit of a don't rock the boat kind of situation as well. While we've had the tariffs imposed by the Trump administration last year, economies all around the world, particularly here in Asia as well as in the US, have held up reasonably strongly. You know, for the US, I guess the conundrum now is how bad is that unemployment picture? We'll get some key inputs on that today, of course. And how bad is the inflation picture? And if that's coming down as well, you know, can the Fed just ease gently through the year and continue to support that economy? And that would help those small caps continue to sort of gather a little bit more favour.
Paul, just want to get across some breaking news out of Australia. We are keeping an eye on shares in Rio Tinto. They're sinking at the moment. They're off by a little bit more than 4%. This is, of course, on that report that Rio Tinto and Glencore understood to have restarted talks over a potential merger. This is according to people familiar with the matter. So that deal apparently under discussion as recently as this week. The contours of a potential deal couldn't be determined. We did see Glencore ADRs rising, but Rio Tinto shares reacting negatively at the moment, off about 4.5%. Paul, I want to bring it back to you. You were talking about some of the tricky deliberations facing the Fed heading into 2026. We've got a clean jobs report coming out tomorrow, unaffected by the US shutdown. What are we expecting to hear, and how's that going to impact the thinking?
Yeah, that's it. So once again, two big things actually. There's this evening, our time in the Asia and tomorrow for the US audience, the payrolls, and also we have this High Court ruling potentially on US tariffs as well. So there's quite a lot of risk going into the weekend. I think for the payrolls, it's expected to show sort of that continuing moderate but quite slow pace of job growth. A little bit up, I think, from the previous month. Finally, at least, we have real-time data. We've had such a lag, and it's all been coming through with a delay because of the US government shutdown. So finally, we actually can get a truer read of what that looks like. And I think, the Fed is worried that the job market is under duress and, that it's actually fallen a lot harder than the data has been reflecting. And so even those numbers are not necessarily 100% the most trustworthy, but it's the best that we have to go on and should give a reasonably clear picture. So if it's a negative number, then obviously that would cause some consternation and bring back those Fed bets. If it's a big beat, on the other hand, with only two Fed cuts priced for 2026, maybe the market will start to have doubts about whether there's room for the Fed to even go that far.
And amid all this, we're seeing the dollar extending those gains. Paul, thank you so much. Our executive editor for Asia Markets, Paul Dobson. Now, China is said to be planning to approve some imports of Nvidia's H200 chips as soon as this quarter, limited to select commercial use. Bloomberg Economics says a qualified approval by Beijing signals an effort to balance near-term AI gains with its push for chip self-sufficiency. Bloomberg tech reporter Ian King joins us now for more. So, Ian, what are we hearing about what China could be approving, and how difficult might this be to sort of separate commercial and state use of these chips?
Well, this is a three-part process. First, there has to be demand from Chinese customers. According to what Nvidia told us this week, that is the case. Demand is strong. Secondly, the US government has to then vet a licensing process. We're being told that that is in the final stages, and that's, again, according to what Nvidia has said publicly. The third and less clear part is how Beijing will respond to that, whether it will allow its companies to go forward or whether it will continue to try to push the use of domestic chips. And what our reporting has shown out of our colleagues in Asia is that China is at least willing to allow some of its companies to take those Nvidia chips.
Ian, what are the implications for Nvidia as well? Because, Jensen Huang's been assuming that revenue out of China is going to be zero. That assumption now likely to be challenged.
He's already sort of re-sculpted viewpoints on that one. We asked him, this is Bloomberg asked him, said, look, hey, you said you're going to have $500 billion of data center sales in the next few quarters. Now you're talking about China. Now you're talking about demand being stronger. What's that total looking like? And he said, well, it's an upward bias to that. We're going to do even better than that. And he said that 2026 is going to be a good year.
How will all this benefit China in the near term, given how Chinese firms have already been adjusting to the uncertainty of access to Nvidia chips?
Well, they haven't really adjusted to the uncertainty. That's the point. They are arguably a victim of countervailing forces, which is obviously the geopolitical sort of rivalry between Beijing and Washington. If you're a tech company, you want the best components, you want the best computing because that's your competitive advantage. At the moment, that is Nvidia, is Nvidia systems. They haven't had access to them. Beijing has pushed them to try and make do or to use domestic components, which by most people's reckoning are far short of the capabilities of Nvidia's chips. So, a lot of conflicting strains there, and judging by the orders that we've been told about, they want to be using Nvidia still. So we'll see to what extent that happens and to what extent they're allowed to do that. And we'll see also, it'll serve as a kind of an update on the progress that the Chinese domestic efforts have made themselves, because if they shift wholesale back to Nvidia, if they're allowed to do so, then that kind of says bad things about local progress. If they feel they don't need to, then that obviously gives a more positive outlook for the Chinese domestic attempts to get in the AI chip game.
All right, Bloomberg technology reporter Ian King there. Coming up on the Asia Trade, we are live from Las Vegas for the final stretch of this year's CES. We'll be getting the outlook for AI and the chips manufacturing sector with the chiefs of DeepX, Doosan, Bobcat and Kneron. This is Bloomberg.
Let's take a quick look at how U.S. defense shares rallied so hard overnight, following on from this geopolitical hawkishness from the Trump administration and these suggestions following the developments in Venezuela. That could mean the U.S. military remains involved in the region for years to come, so that continued outperformance in the sector. Now, some of the top global stories we're following as well. Iran's president has ordered security forces not to target peaceful protesters in a bid to diffuse violent unrest that activists say has left at least 36 people dead. Demonstrators have taken to the streets nationwide for more than a week after the local currency crashed to a record low. Hardline officials have accused foreign adversaries such as the U.S. and Israel of fueling the unrest. Venezuela's government says it plans to free some local and foreign prisoners after the U.S. capture of President Nicolas Maduro. The National Assembly leader announced the plan on state television, describing it as a peace gesture. It's not clear how many prisoners would be released. Spain says 5 of its citizens are among those to be freed. White House trade advisor Peter Navarro says U.S. industrial breakthroughs will eliminate China's market dominance in rare earths. Beijing's efforts to withhold supplies of critical minerals last year helped fuel a trade war with the U.S. But Navarro told us that American innovation will boost domestic production.
The China relationship is a very difficult one. China has been flexing its muscles now in Europe and India and the United States, saying basically, we're going to do what we want, and if you try to stop us, we're going to take away your critical minerals, because they think they have a monopoly on it. But that's just a matter of time. American innovation is going to quickly wipe away that innovation, that threat, that weaponization.
And you can listen to the full conversation between Michelle Hussein and Peter Navarro by searching for The Michelle Hussein Show wherever you get your podcasts. Paul?
Let's take a look at oil prices. We had a modest gains for crude. Brent now up about 3.3%. New York crude also a little bit higher, about $58.41 at the moment. This is ahead of a meeting at this Friday U.S. time. 20 oil executives, or almost 20, including Harold Hamm, going to be meeting President Trump to talk about rebuilding Venezuela's energy sector. That's not going to be a cheap or a fast undertaking. Venezuela's oil infrastructure has been suffering decades of neglect. However, the administration's shorter-term plan is to start selling Venezuelan crude stuck in storage behind the U.S. naval blockade. Chris Wright, the energy secretary, also says China's not going to be cut off from Venezuelan oil. Take a look at Chevron, performing pretty strongly, better by 2%. It's up about 4% since the events of the weekend. And with Venezuelan leader Nicolas Maduro deposed, President Trump does now want those U.S. oil giants to revive the nation's energy industry. Chevron, of course, already there. Bloomberg Originals has been looking at how Chevron has managed to maintain its presence in the country. Here's a preview.
The United States has carried out a series of strikes against Venezuela, announcing the capture of Nicolas Maduro and his wife.
Nicolas Maduro stood in federal court and pleaded not guilty to narco-terrorism charges.
Donald Trump said his military buildup in the Caribbean and destruction of civilian boats there was about alleged drug trafficking. But following the U.S. attack on Venezuela, another reason has taken center stage.
The oil business in Venezuela has been a bust, a total bust, for a long period of time.
Everything that we've seen during his second administration has been consistent with his view that the U.S. energy dominance is key to his agenda.
We're going to have our very large United States oil companies go in, spend billions of dollars, fix the badly broken infrastructure, and start making money for the country.
But one U.S. oil company is already there and has been for decades.
Chevron produces about 25% of Venezuela's oil today, is the largest investor in the oil industry and in the country.
We've been in Venezuela for the last 100 years. Our presence there, we believe, is important for the local economy, the regional economy, the people of Venezuela.
This is a story about the extent to which a US oil company is willing to go through the trials and tribulations of geopolitics in order to stay in a country that has the world's biggest oil reserves.
Chevron has virtually no competition. It has no oversight. And so it's really a very unique situation.
So how did Chevron manage to stay in Venezuela when everyone else left? And what role could it play in the country's future if Trump gets his way?
And subscribers can watch the full documentary right now on the Bloomberg terminal or online at Bloomberg.com. Meantime, let's take a look at how U.S. assets are faring across the board. It was, of course, a mixed batch of data in terms of inflation expectations feeding through. And then when it comes to the jobs data, we are, of course, watching out for payrolls, but we are seeing already these layoffs coming in fewer than expected. Jobless claims also rose less than expected. So that might signal how the Fed maybe doesn't need to cut as much given the relative strength in the economy. Meantime, Fed Governor Stephen Miran says he's looking for 150 basis points of interest rate cuts this year to boost the labor market. Speaking exclusively with Bloomberg, Miran thinks monetary policy is currently restrictive.
I'm unsurprisingly the lowest dot. I'm looking for about 1.5 points of cuts. A lot of that is driven by my view of inflation. I gave a speech about this about a month ago in December at Columbia University. My view is that almost all of the excess inflation over target is due to quirks of how we calculate inflation. So as you have talked about with many of your guests many times before, shelter inflation really, really lags a lot. And because average tenant rents have caught up to new tenant rents, because market rents have been running at a 1% rate for a couple of years now, I think it's appropriate to sort of think about underlying inflation as abstracting from that a little bit. The shelter inflation is indicative of a supply-demand imbalance from 2022, 2023, not 2027. We need to be making policy for 2027 because of policy lags. And their side of it is the portfolio management fees that I'm sure you've talked about again with many of your guests many times. Stock market went up, mechanically inflation moves higher, despite many of your other guests, I'm sure no doubt, telling you about fee compression in the asset management industry for decades. So you abstract from those two things, underlying inflation is running at 2.3%. That's within noise of our target.
That sounds like an argument for neutral. You're making an argument, though, for this year, for accommodation. Where does that come from? Why are you looking for accommodative monetary policy stance coming out of Washington? Yeah,
so a couple things. First of all, as I just said, underlying inflation is running within noise of our target, and that's a good indication of where overall inflation is going to be going in the medium term. But then the unemployment rate is 4.6%, right? So that means that there's about 1 million Americans who don't have jobs, who could have jobs without causing unwanted inflation, without causing unwanted upward pressure on inflation. I don't think it's right to tell those people that they shouldn't have jobs because we're just mechanically calculating inflation in some silly way. I just don't think that makes a lot of sense. The other thing is that because we've kept policy tighter than I think it ought to be, that makes me mark down our growth forecast for the future relative to where it should be. And so if we hadn't been keeping policy what in my view, too tight over the last year or so, it wouldn't be necessary to provide that type of accommodation.
Just quickly, you say mark down in the future because the Fed actually marked up GDP for 26. Where do you mean in the future?
No, so like when you look at these dots, right, in the SEP, they're projections of appropriate policy and projections of economic fundamentals like growth and inflation, conditional upon appropriate policy. So my projections for growth and inflation are conditional upon getting my policy forecast.
Fed Governor Stephen Miran there speaking with Bloomberg's Jonathan Ferro. We have more ahead on the Asia trade. This is Bloomberg.
You're looking at live pictures of protesters in Minneapolis following the death of a woman. The deadly shooting involving an immigration and customs enforcement officer is renewing debate over President Trump's efforts to send heavily armed federal agents into U.S. cities. Clashes between federal and local officials are also complicating investigations. Our immigration reporter Alicia Caldwell joins us for more from Minneapolis. So, Alicia, what are we seeing there? There seems to be immense anger pouring out into the streets.
Anger is definitely on the agenda. Folks are frustrated, to say the least, with the focus on Minnesota, the Minneapolis-St. Paul area in particular. ICE, Immigration and Customs Enforcement, has been here in earnest since early December in a surge operation footprint and focusing on both the Somali immigrant community as well as allegations of fraud within the Somali community and the greater community writ large. But what we saw yesterday was the second fatal shooting involving the Department of Homeland Security under the Trump administration since these surge operations around the country have begun. The first was earlier, in September in Chicago. There was a fatal shooting, and now this incident yesterday. So the city's a little bit on edge. A couple of folks described it as tinderboxy, wondering, what comes next. It's a community that is obviously very familiar with social unrest in the wake of the George Floyd killing, not far from this incident. And so people are waiting to see what happens, but angry with the ICE presence for certain.
Alicia, most people would have seen by now some of the video circulating of this incident, yet despite evidence, there seems to be dueling narratives emerging around what happened. What are the risks here?
Right. There are decidedly different narratives. The video, as we've reported, does not appear to show what is purported by the federal government. There are questions about the procedure the agent took, why he was where he was, and the decision to shoot, I believe, 2 to 3 times, fatally injuring this driver. There are lots of questions. The investigation is now being led strictly by the Department of Justice and the Federal Bureau of Investigation. The state authorities were sort of cut out as of last night. The state has acknowledged, hey, the FBI invited us to join this investigation, and then late yesterday said, actually, it will be an FBI, Department of Justice only case at this point. At the same time,
all right,
top members of the administration have declared that this was a self-defense justified shooting, while also saying the investigation is ongoing. So those are dueling narratives as well. So we'll see what happens.
All right, Bloomberg's Alicia Caldwell in Minneapolis. We have more ahead on the Asia trade. We'll be heading to the CES event in Las Vegas in a moment. This is Bloomberg. Some breaking news out of Japan. Big rebound in household spending for the month of November, much stronger than expected. 2.9% bounce there. The expectation was for a 1% contraction, so a big reversal of the 3% contraction that we saw back in October. So a 2.9% increase in household spending on year in Japan for the month of November. And this somewhat contradicts the slip in consumer confidence that we saw in December from the Cabinet Office. The Consumer Confidence Index, though, has been pretty weak for the last 20 years. But that big spike there in household spending, 2.9% increase, Avril.
Yeah, Paul, let's also take a look at how U.S. tech fared overnight. We're going to be watching in Asia whether that value rotation sort of continues on. But even within these big tech names, you can see a split track, so to speak. Alphabet is really pulling ahead, and it's overtaken Apple to become the second most valuable company by market cap. So it shows you how the Google parent has really been benefiting from AI and the craze around it. We're also talking about Chinese-made humanoid robots that are on display at CES in Las Vegas, and they've been showing off skills from table tennis to kung fu. China's robotics market is advancing rapidly, with third-party data estimating that more than 40 humanoid startups launched last year. But experts say a gap remains between flashy demos and real-world deployment as the focus shifts to refining reasoning and vision models. Let's head over to Vegas, where Bloomberg Sherian and Annabelle Dwellers are joining with our next guest.
Yeah, Avril, really the focus right now on AI-powered hardware and, of course, as you said, the reality and how it could really apply to real use cases. And powering it all through are those chips. Today, we're joined by South Korean chip designer. The focus is on ultra-efficient on-device chips. With us is DeepX CEO Lokwon Kim. Lokwon, really great to see you again after the World Economic Forum in Tianjin. Yeah. You've been around the world right now, really selling your devices. Tell us a little bit about why your chips are such a differentiator from, say, the likes of Nvidia that has such a big demand from hyperscalers.
Yeah, exactly. Let me explain one example. For example, Hyundai robots, they are, are using our chips. Based on our chips, they can, perceive, decide, and react to the physical world. But in the past, these capabilities, normally, require the GPU technology, which consumes a lot of power and generate excessive heat, making them very unsuitable for the on-device applications. So instead, robots can use our chip because it consumes a lot of 5 watt, but Nvidia chips can consume like 40 watt, over 100 watts, which is a really, really high power consuming thing. So that's why, because our low power technology, the robots can automatically process any kind of labors. So that's why, in my opinion, that's why we use cutting edge technology like Samsung Foundry 5 nano or 2 nano technology. So in my opinion, right now it is a time to use the MPU. This is a low power technology for AI applications.
Yeah, so it's really about allowing AI functions to run directly on devices and robots as well. And in-device AI and embodied AI have been really key themes at CES for this year. But to that end as well, it's been perfect timing for you to launch this new chip, the DX M2. So tell us about that.
Yeah, one of the biggest challenge in AI today is the high cost and power constraint because of the current data center-centric model. So to address this challenge, we designed a new chip. It's a kind of generative AI on-device chip. So it processes up to 100 billion parameter generative AI locally right on the devices, not in the data centers. So by using this, we can process like a ChatGPT service without the broadband network, without the data center reliance.
And you're partnering in Samsung and using their foundries to actually manufacture this. I'm really curious about your partnerships because you're also partnered with Baidu, but also you're partnered with Dell here in the U.S. So what are your expansion plans, especially in this very tricky geopolitical environment?
Oh yeah, there are some regulation in the geometry issue, but it regulates around above the 100 TOPS capacity of the AI chips. But our products is under 100 TOPS. Like DXM1 is provides 25 TOPS, and the DXM2 provides 80 TOPS. That's why. So we have freedom to sell our products all over the world.
It is, though, coming up against a push, and you don't just see it from China. I mean, there's a push here in the US as well to reshore, onshore semiconductor capabilities. So where do you see the biggest strengths for you as a business moving forward, and are you concerned as well about that push for self-reliancy and self-sufficiency also restricting sales of your products?
Yeah, I mean, right now we cover all over the world, like in the China, US, South Korea, Taiwan, Japan, and even Europe. So, in China, there is a huge movement about the on-device AI, services. That's why I can see the many players there. At the same time, US is focusing on the, the AGI or ASI level algorithm, technology. So also we can see that many, manufacturing industry in the Japan and South Korea, including, Renesas or Panasonic, LG, Samsung.
Do you think you can actually go against Nvidia?
No. In my opinion, it's like Intel and ARM technology. Their technology, for the high performance. But we cover low power in small devices. Like, based on GPU, they consume around 100 watts. But we cannot use that chips for the on-device, applications like, robots or battery powered.
But is that the trend? Or we're going more towards on-device?
Exactly. So, normally experts, forecast that, the major part of the AI will be the physical AI. That means embodied, generative AI capability. So in my opinion, in the future, we can see a lot of, handheld devices that can use the generative AI.
We know you've been looking at a listing. How is that going, that process? And would you consider, instead of perhaps pursuing an IPO, also looking to make yourself an acquisition target, just because we've seen the likes of AMD, Nvidia, Qualcomm making several high-profile acquisitions in the last few months?
Yeah, so also we got some acquisition, requests, but 1 year ago we rejected it. That's why I cannot share the information. But anyway, for DeepX IPO, we are taking very thoughtful approach. While seeing the strong interest from the capital market, 2 months ago I was invited into the International Day at NYSE, and at the same time we discussed with the Nasdaq and the Singapore Stock Exchange as well. We're really grateful for that heavy interest, but our top priority is on the business strength or business foundation. So that's why we will choose the IPO timing very carefully when we have the strong business foundation.
Could that be next year?
Maybe 2 or 3 years later.
2 or 3. When you say you actually had interest from people that wanted to acquire you, what sort of businesses are we talking about regionally as well?
Because they were, normally semiconductor companies. Right now, on-device, semiconductor, there are conventional players in this area. So like NXP, Renesas, and the TI, they are maybe interested in the, in on-device AI, chip, designs. That's why. But for us, we would like to see change this world without any IPO and the acquisition.
What's sort of the valuation then that's also being given to you in the market?
Around 1 billion. So we are talking with investors in the global side or domestic side. So.
And how much is that? Do you expect to see that growing this year just because you've had such an explosion in demand for this sort of technology that can power in-device AI? Where do you expect to be at the end of the year?
We can receive, we are not quite, sensitive to the investment. Actually, we have some capital money, and at the same time, some foundries support our chip designs and our development. That's why we are more, consider about the partnership in the world so that we can have the variation of the products.
What is your client portfolio like? Because we talked about Dell, for example. I know that you're also working with Hyundai Robotics Lab. What are some of the big names that you're supplying to right now, and what does it look like?
Let me share the example of our, mass production. So, for example, we are collaborating with Baidu on the largest scale deployment of the AI-enabled IT services. So also now we are expanding to the physical AI applications such as robots, drones, and the smart factories. In parallel, the mass production of the commercial robots from Hyundai Motor Robotics Group is set to begin this year. At the POSCO DX, our chips are being deployed across multiple industrial automation applications. So there are over 50 customers in the world. So there are so many different stories.
Lokwon Kim, really good to see you again. Thank you so much for joining us. He's the CEO of DeepX, of course, here with on-device chips and really potentially what could be the next trend when it comes to AI hardware. Back to you guys, Paul.
All right, Sherry-Ann and Annabelle Drew is there in Las Vegas. Let's take a look at how some of these big South Korean tech names are tracking in the pre-market. Both SK Hynix and Samsung Electronics now off by about 1%, a bit more than that, in fact. This does reflect what we saw in the U.S. session, a bit of a rotation going on out of some of these big tech names into energy producers, consumer companies, small caps as well. So despite the longer-term optimism around AI and flash memory in particular, seeing some declines there for SK Hynix and Samsung in the pre-market ahead of the Korean Open at the top of the hour. We have more ahead on the Asia trade. This is Bloomberg. The latest from the corporate front, Paramount Skydance has reaffirmed its hostile offer to buy Warner Brothers Discovery, insisting its bid is superior to the one from Netflix. This is partly because the Netflix deal plans to hand investors stock in a cable TV spin-off that Paramount deems worthless. Paramount points to the poor market debut of Comcast's cable spin-off, Versant. General Motors is taking a fresh $6 billion hit as it scales back EV and battery production. That brings total EV-related write-downs to $7.6 billion. A new regulatory filing shows the company is recording all of these charges in its fourth quarter results. Time now to head back to CES in Las Vegas, and our next guest runs a South Korean conglomerate covering businesses from construction equipment to fuel cells and robotics. Our co-anchor Sherry-Ann is standing by with that conversation. Sherry.
Yeah, Paul, you're talking about Doosan Bobcat, and of course we're trying to take the construction site into the digital age, and CEO Scott Park is here to talk to me through what they're doing here at CES, because you have really some new solutions out there, including the AI-powered job site companion as well. Tell us a little bit about the highlights this year.
Oh, absolutely. We've done a lot around AI. I think the job site companion is a very exciting little tool. You can see our equipment, whether it's a mini excavator or a loader. You can actually sit in the cab and talk to your machine, and you can talk to it about what type of machine it is, to start the engine, how do we reset the power settings for the different attachments. So there's a lot of things that you can do while still operating the machine.
They will be deployed this year. How much customer demand are you seeing?
There's going to be a lot of customer demand because we have an issue with unskilled workers. We have an issue with people that need to learn how to use the equipment quickly. So for people that are newbies that can actually go in there and start talking to the machine, they can actually be operational very quickly. So there's a very high demand because, as you know, there's a huge labor shortage, and in particular labor shortage of skilled workers.
Are we talking more along the lines of Asia, here in the United States as well, where you're seeing the demand?
Absolutely. Labor shortage is actually pretty much a global phenomenon. Now, there's two types of labor shortage. One, if you look at Europe and you look at the United States, you're talking about actually the amount of labor. So people, there's a shortage of people. Now, globally, which is the other part, is about skilled labor. And so what we need to do is we need to come up with solutions like Job Site Companion, where we can actually take the unskilled laborer or the operator and be able to bring them up to speed very quickly.
When you're coming up with these solutions, how are you looking at AI partnerships?
AI in partnerships is actually a key point for us. It's not just about the Job Site Companion, but we have autonomous mowers and autonomous tractors and some of these other products that we actually have in the marketplace. And so what we do is we believe that we cannot be the everything to AI. So we work with startups. whether we take an ownership position or do a joint venture or even just do a joint project with them and actually come up with a business model where we can coexist and actually be winners together.
We always look at construction equipment makers because we see that as sort of a test of demand and where the economy is headed. Of course, you operate and the bulk of your business is here in the United States.
That's correct.
What are you seeing for 2026?
For 2026, it's more of the same. The U.S. economy is very resilient. It's very strong. As you know, there's a high demand for construction in the United States, whether it's large buildings, infrastructure, or even homes, or especially homes. And the issue that we have in the United States right now is the demand is up to here, the supply can't catch up. And that has a lot to do with labor. So if we're able to solve some of the labor problems by providing AI tools to facilitate that, then I think we can actually create more of an economic growth.
And we continue to talk about AI data center build-outs as well. Are you seeing more of that and perhaps more demand around some of that infrastructure?
For us, we focus on compact equipment. So as far as the data center demand, we do see it, but that's more really for the large equipment manufacturers as opposed to us at Bobcat.
You have 70% of your revenue coming from the U.S. You have about, 12% or so when it comes to Asia and 17% in Europe. Is that correct?
Yeah.
Where are you seeing the bright spots?
The bright spots, clearly the U.S. has always been a bright spot. I think Europe is turning around. There's been a bit of softening, and I think that's going to happen or to continue for a while. But we do see that that's going to start coming back. And Asia, I think we've got a little bit of a lull right now. So let's see what happens there. But clearly, I think there's more stability in the economy and in the industrial area. And so you see, we're talking about places like in Southeast Asia, where we see some growth and some capabilities coming to light. Obviously, in the more developed countries, you see a little bit more of labor issues and economic, let's say, sustaining itself, but not necessarily growing.
I know that in Europe, perhaps the expansion into that market also has to do with your acquisition of Wacker Neuson. You're looking into that, is what we heard.
Right. I'm not at liberty to discuss the acquisition, but the information did leak, so we are in discussions, but we don't know at the end of the day if it's going to come to fruition or not.
What is the timeline that you're looking at?
That's also something that I can't discuss at this moment.
But do you see any synergies, and what sort of businesses are you looking at in order to expand inorganically?
Right. Well, outside of Wacker Neuson, actually, let's just talk about the Doosan Bobcat business globally. What we've really done is we focused on scale matters and size matters when it comes to our industry. Because these things, you could call them pieces of steel, and they are actually tool carriers, right? So they're taking different tools, and then you actually can put other tools in here and then make it work. So that's what I would call a hardware tool carrier. So if I can get as many of these pieces of steel out in the workplace, in customers' hands, and working, the next step is actually transforming these things into software tool carriers. And that's where AI and digital comes in.
Before I let you go, I know that you have a patent dispute against Caterpillar and you're alleging equipment infringed patents. What are you hoping to see in that outcome?
Well, you know, again, I can't talk about the litigation, but clearly the reason why we have patents is to protect our intellectual property. It's to protect our capabilities. We've invested a lot of money in developing our products and our functions and our technology, and clearly we want to protect that. And that's really, at the end of the day, what we're looking for.
The thing is that when you're asking for import bans, the way that Caterpillar and some lawmakers here in the U.S. are seeing it is that it will affect jobs here in the United States. It concerns national security, according to them. How would you respond to that?
We don't really necessarily agree with that. Naturally, we have 7 manufacturing plants in the United States, so we should be able to work with Caterpillar and come to a good conclusion there.
Scott Park, really great to have you with us. He's the CEO of Doosan Bobcat, of course, and exhibiting here at CES 2026. Back to you guys.
Sherry, thank you. Sherry-Ann in Vegas for us. And we have more in store for you from CES, and we're speaking next hour with the CEO of chip startup Miran for a deep dive into so-called edge AI. More ahead on the Asia trade. This is Bloomberg. Well, Japan's Nikkei 225 is off to a galloping start this year. U.S. politics could be a looming disruptor to the stock market rally. That's the subject of today's Taking Stock. Let's go to Tokyo, and our senior stocks reporter Hideyuki Sano is with us for more on this. So, Hide, we are seeing perhaps in the rearview mirror a little bit the uncertainty surrounding Takaichi's policies. Is 2026 the year where geopolitics and perhaps U.S. politics take center stage as an influence on Japanese stocks?
Exactly. When you talk to market players, generally speaking, investors are bullish about Japanese stock market this year. But if you look at the data, one interesting anomaly you can find is that Japanese stock market tends to do poorly in U.S. mid-election years, and the gap between the performance gap between the midterm election years and the rest of the years are quite sharp. And one reason of that could be it's related to U.S. policies. Now, of course, U.S. midterm elections historically are quite tough, difficult for incumbent president's party. So that tends to make the U.S. administration taking a tougher stance towards foreign countries, including major trading partners. And Japan had the first-hand experience of that during the 1980s, 90s, when Japan had a huge trade surplus with U.S. Now, of course, Japan's trade surplus is much smaller today, but still Japan has a big surplus, and the Trump administration is not happy with that. So investors have a good reason to worry about potential upset in terms of U.S. policies.
All right, our senior stocks reporter there, Hideyuki Sano. Let's just take a quick look at how markets are tracking ahead of the open in Korea and Japan. We will be keeping a close eye on tech names. We've already seen some moves for SK Hynix and Samsung in the pre-market, both of those losing ground, which follows on from what we've seen in the US, this rotation out of some of those big tech names into other sectors like energy and small caps. Also watching Rio Tinto, seems to have found a floor now, off by about 4%, as we have been reporting rumours that the talks between a merger between Rio and Glencore back on, although the exact contours of a deal still unknown. Market opens in Seoul and Tokyo are up next. Stay with us for that. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. And of course, overnight in the U.S., given that countdown to the U.S. jobs numbers, payrolls, I think investors overall, they want to take big bets. So we actually saw bonds and stocks coming under pressure. In terms of equities, it's of course about this rotation we've been seeing out of big tech and into some of the smaller caps. Energy, defense-related stocks have also been doing well. When it comes to U.S. crude futures, or New York crude, I should say, you're looking at oil prices bouncing back up above the 58 handle. And this is as traders really weigh out the U.S. president's threat against Iran, developments related to Venezuela as well. And he's, of course, set to meet with some of the executives from big oil in the U.S. later today. This is what we are seeing in the Japanese stock markets in the early goings after 2 days of declines. And arguably, where the value-related stocks did a bit better, we are seeing that bounce back, which was, of course, a bit of a breather from the rally that we saw already at the start of the week, although it does look quite tepid and those early gains look like they're being erased. We also had Japan household spending rising, so data in the past hour, and that showed us perhaps households boosting spending given the expectations from stimulus from the Takaichi administration. In terms of the 10-year yield in Japan, don't forget the 30-year. There was a bit of a wobble in the auction just a day ago, given the continued fiscal concerns. Now, we are also watching, of course, what we're seeing in South Korea, given the rotation and the concerns about big tech. There was a bit of a stumble in the pre-market for the likes of SK Hynix, Samsung Electronics, although these are seen as the companies that will benefit from this insatiable demand for memory-related chips. Also watching, of course, what EM currencies are looking like, given the extension of gains we've been seeing in the dollar. And as we watch out for data in the U.S., it does look like a very strong or resilient U.S. economy. Maybe this pairs back the bets of a Fed that needs to cut aggressively. Joining us now for analysis and insights, Vikas Pershad is Asian Equities Portfolio Manager at M&G Investments. Good to see you and Happy New Year.
Happy New Year to you as
well. It's been quite a year so far. I wonder, when you're looking at the rotation in the U.S., is that a worry for you for Asia stocks, or is this something of a blip given what's been quite a good start to the year already?
I would say it's neither a blip nor a worry for us. We remain very constructive on Asia. For long-term active managers, this is the place to be, we feel. North Asia, South Asia, whether it's South Korea, China, Hong Kong, Japan, or India, we're very constructive on Asia, seeing a lot of opportunities. If the question is, what have we done, what are we doing? Heading into the end of last year, we reduced our AI exposure. You mentioned memory, we reduced our exposure there. To SPEs, we reduced it there. Now we're heading into earnings season. You're very right that there's insatiable demand for memory. There are knock-on effects. If you look at consumer electronics companies, we're seeing a slowdown in demand there. Companies are de-speccing because the cost of materials is going up so much. Coming back to memory for a moment, yes, this peak is larger than any peak we've seen. But there are always peaks. There are cycles still. The volatility, the cycles might be shorter, but part of our thinking is that the cure for higher prices is higher prices for memory. And at some point we will see this roll over again as well. And there's a lot in the price. Yes, the demand is high. Yes, this is a unique situation. But we've seen this movie before, and the ending is always the same.
And how do you position amid this? I mean, there's still that concern in the market that the beneficiaries of this demand for memory, maybe they also run up into those troubles given, as you say, consumer electronics, that headwind.
Yes. So the buyers of the memory are starting to de-spec. Customers also are becoming more wary of these prices. If you're buying a new smartphone, you might buy a 512 GB smartphone rather than a 1 terabyte NAND smartphone, as an example. If you look at video game consoles, those companies are running into some issues on profitability and on demand. And then that also has knock-on effects on software and associated services. Also, we shouldn't forget that China plays a big role in anything related to semiconductors today. This is unlike previous memory cycles or previous semiconductor cycles. If you look at the large Chinese memory companies, they will soon come public. They will raise a lot of money. They will bring capacity online. We're seeing the same thing in semiconductor wafers. In semi-booms of the past, whenever there was a shortage, wafer companies would see large demand. These are the wafer companies in Germany, in South Korea, in Japan, in Taiwan. That is different this time because of, again, all the capacity coming online in China. We can't forget that. These are some of the same issues people were worried about a year ago, and then we had the big AI-related boom for memory. But those issues have not gone away. If anything, they've become bigger.
Is that the play for Chinese tech then, hardware versus software, given how it also seems there's more state support in terms of funding there versus in software where there's intense competition?
Yes, that is our view. Also, there's a broader question here about Chinese companies in general. Just yesterday, there were headlines where we saw on Bloomberg first about India potentially opening up its market for Chinese companies in the infrastructure sector. So you saw immediately infrastructure-related capital goods companies in India selling off aggressively into the close. The Chinese companies don't have to have a big presence on the ground in India to upset the apple cart. They just need to show up and increase competition. So it's not just semiconductor hardware. It's capital goods, infrastructure companies, renewables companies, battery companies from China going around the world. This is also why we remain very constructive on China. This is not just about the banking sector or property companies. We see opportunities in China all across sectors for long-term active managers.
Is there a differentiation between onshore, offshore in your mind?
Well, there's a differentiation in valuation, but not necessarily in the companies that we see. There's a lot of IPOs to sift through. There's a lot of new companies coming, but we have enough to look at from the existing universe of companies in China and Hong Kong, and so we remain very excited about China.
You talk about India there. Are you a bit more constructive there? I mean, is this the time to be picking things up? Because the risks that turned investors away from it last year, not much has changed.
Not much has changed. The underperformance has continued. Even year to date, you have South Korea racing ahead in dollar terms. Japan, I know the last couple of days it was down, but the first couple of days were quite strong. India is flat to down in dollar terms already. For the past quarter century, the Indian equity market has been the great Indian compounding machine. Over the next 25 years, that story remains intact. But yes, there's been underperformance here. We're going to get the earnings season will kick off in India next week in earnest with the IT services companies. We remain underweight that sector. India was seen last year as the anti-AI trade. There's some merit to that, but there's almost 7,000 listed companies in India. We don't have the Mag 7, but we have the Mag 7,000. So if you're a long-term active manager, there's a lot to choose from. There's a lot to like. Just heading into the end of last year, early this year to start, we have grown our defense holdings, for example. It's the broadest and deepest defense sector in Asia, perhaps in the world. And so that's one area that we have grown. Healthcare, we have grown. Small caps, uncharacteristically, in 2025, were meaningful underperformers relative to the broader market. That typically is not the case in India. So we're selectively adding small cap and mid cap exposure in India as well.
Yeah, I mean, to your point about defense, that's already been the outperformer this year, the extension from last year, right? I wanted just final thoughts from you on what you're seeing in the interplay of the dollar. Because the assumption last year was soft dollar. This year, we're already seeing that rebound. How does that affect stocks?
For us, we think probabilistically. We have scenarios. We don't make point forecasts, but it's causing us to widen out our earning scenarios and also the multiples that we pay for companies. This is especially the case in Japan. It's not entirely an export-driven economy, but there's a lot of exporters there. This is also the case in South Korea, where you have big volatility in the won over the past few years. And in India, of course, where the currency is now at 90, the rupee against the dollar, could be at 100 in a few years. What does that mean for earnings? What does that mean for exporters and importers alike? The last thing I'll say, just on coming back to defense for a moment, this has been one of the best performing sectors in India over the last 4 years, around the world over the last year and a half. But if there's a theme that has emerged already this year, it's one of escalation, whether it is China and Japan around rare earths or defense-related equipment, whether it is the U.S. and what it's doing in its own hemisphere, India and Pakistan last year, China and India this year. We'll see. But it seems like the theme of escalation continues rather than reverses, which means that some of the trends that we saw from last year, they probably continue, at least into the early part of this year.
Getting more intense we speak.
Yes.
Vikas, great to have analysis from you. Thanks so much for coming in, sharing your thoughts. Vikas Pershad is Asian Equities Portfolio Manager at M&G Investments. Now, this theme of escalation, perhaps in some way we can be talking about de-escalation. We're hearing from China saying, or said to be, I should say, planning to approve some imports of Nvidia's H200 chips as soon as this quarter, limited to select commercial use. Bloomberg Economics says that a qualified approval by Beijing signals an effort to balance near-term AI gains with its push for chip self-sufficiency. Our Asia tech correspondent Annabelle Jolas joins us now with more from the CES in Las Vegas. Belle, put things in context for us.
Well, this is a very significant move, really, and some great exclusive reporting as well from our Bloomberg team. But essentially, it's been a big question because after we heard from Washington that they were planning to greenlight these sales of the H200 chip, Nvidia's chip, to China, it was that real question, would Beijing actually be allowing mainland firms to purchase them? But now what we're hearing is that, yes, officials are looking at Chinese companies being able to buy for select commercial purposes. That's according to sources. But at the same time, the H200 is not going to be allowed to be used for military, sensitive government agencies, critical infrastructure, and state-owned enterprises. So quite a few caveats around that. The concern here is, of course, comes down to security, and it's certainly a similar measure we've seen for the likes of Apple, for instance, its devices being barred from government use, Micron technology chips as well in China. So it is a major win at the same time for Nvidia because, of course, it's been essentially locked out of the mainland market since 2022. And what we're hearing as well is that companies are preparing rather to buy these chips, the likes of Alibaba, for instance, ByteDance. We've heard from sources that they've both told Nvidia in private that they do plan to buy around 200,000 chips each. Both of those companies, of course, alongside the more prominent DeepSeek AI startup as well, are rapidly trying to upgrade their models to compete with the likes of OpenAI and those other US rivals. So again, it really underscores the importance of having access to the most advanced technology that they can have, which is the H200 for now.
That was interesting, despite this perhaps positive development, the way Nvidia stock, maybe investors weren't buying it. What have you been hearing in terms of the reaction from analysts?
Well, I think our geoeconomics tech team put out a really interesting analysis piece, but essentially what they're saying, or their take on the situation, is that this is Beijing's attempt to have it really both ways, because China really faces twin challenges here. On the one hand, they're trying to build up their tech self-sufficiency or self-reliancy, so they want to have that domestic semiconductor ecosystem. At the same time, they want to be a world leader in AI models. And at this point in time, they just do not have those capabilities domestically, even though you're seeing advancements in the likes of Huawei, for instance, more threads, Cambricon, other chip designers in this space. It's still not, of course, as advanced as what you can get from the States. And so that really speaks to the need for them to allow access to the H200. But again, going back to those caveats, it also underscores why you need them in place, given that you can't really have a free-for-all in the US chips, because at the same time then you'll damage that push really and all of the investments they've made into the domestic ecosystem. So the segmentation, I mean, it's certainly going to be really difficult to try and slice and dice this situation. It's messier than perhaps it appears, because there's a lot of blurring between the commercial and the state uses in China's AI ecosystem at this point in time, because you've got these major cloud providers like Alibaba, Tencent, Baidu. They all have commercial contracts, but also government contracts, often running on the same cloud platforms as well. So trying to actually distinguish between what will be allowed and what won't be allowed is going to be really one of the big question marks out of this.
Belle, thank you so much. Our Asia tech correspondent, Annabelle Jolas, live from CES in Las Vegas. Now let's take a look at how U.S. assets are faring as well. We saw treasuries sort of running into a bit of a wall when it came to the rally overnight, as did U.S. stocks. And this is, of course, in the countdown to those U.S. payrolls numbers, where we already got some numbers out of the jobs market. The jobless claims rising less than expected. There were fewer layoffs than some had anticipated as well. So overall, adding to the Fed's case that maybe they don't have to cut as much as anticipated for this year. And of course, this is against the backdrop of inflation expectations based on some of these Fed-related surveys that maybe also add to that case. We have more ahead on the Asia trade. This is Bloomberg. Now, some alert crossing the terminal on XAI. This is, of course, Elon Musk's AI startup. And we're hearing how it's been burning through $8 billion of cash in the first 9 months of 2025. So losses look to be mounting for the Musk firm. Take a look as well at what we're seeing in chip-related stocks. Given how the expectation coming in from the big tech handover on Wall Street look quite negative. And this is an extension of the declines just a day ago on Samsung, on SK Hynix. Tokyo Electron looking a bit of a divergence here. There could be maybe a bit of a distinct play when it comes to tech overall. Now let's talk tech a bit further, head back to CES in Las Vegas, where our next guest has been targeting the edge AI chip market. Bloomberg Sharian and Annabelle Jolas standing by with our next guest. Guys.
Thanks. Yeah, Avril, it's really been one of the big focuses here at CES we've been talking about is that real shift to embodied AI, physical AI, and also the technology that's really needed to make that possible. But to that end, we can bring in our guest. This is the Kneron CEO Albert Liu joining us this morning. So, yeah, it's been quite an evolution that you see from GPUs to NPUs, but what does that mean for you? And also, how does that really benefit your business, given you've been working in this space for a decade?
Yeah, I think the technology migration from CPU to GPU to NPU for AI computing power is kind of clear. It's a little bit similar like a VHS to DVD to MP3. So one MP3 dongle is quite small, but they can repress a bunch of the DVD and also a bunch of the VHS. The same thing for AI computation power. So NPU is quite tiny, but it's a hardware dedicated design for AI purpose. GPU is the hardware existing in the human history for more than 3 decades, right? When I was a kid, there was GPU, and GPU was designed for gaming and graphic purpose, and CPU is designed for logic computing purpose. So for AI computing capability, NPU also is quite tiny, but it's much powerful. And right now, it's a little bit like GPU doing the AI is much better than CPU, so people feel like GPU is the best hardware for AI, which is not. I think recently, no matter it's LPU, the Graph, and also the Google's TPU, it's an NPU-like structure already become the mainstream.
The key point that you're on these edge devices, right? When the hyperscalers are going to Nvidia in order to stack up their data centers, what competitive edge do you have?
I think it's not necessary in the edge computing, actually, frankly speaking. So NPU, we are the very first company commercialized NPU back to 10 years ago. And we even defined the NPU. That's the reason we got the IEEE Darlington Award, IEEE CTS as a leadership award. And even so, if you want to learn NPU, most likely you will read the textbook I wrote. So long and short, NPU is a structure, very simple like a GPU or CPU, can be on the edge side, like in your PC or your cell phone, but also can be in the data center. So like for us, we also have a customer like Naver, NHN, the largest search engine in Korea. Meanwhile, recently we just win a big customer in US, but it's still under NDA. So long and short, NPU structure is just like, you can think like MP3 dongle is quite small, but their structure is dramatically different like a VHS. So right now the memory shortage like HBM or the like 3D packaging, which is most required for GPU structure, is not that hungry or not like necessary for NPU structure.
But I guess to Sherry's point, it is a big focus here, at least at CES, is around that sort of in-device AI as well. So how is that impacting your business outlook, and what are you expecting in terms of growth for this year?
I think the edge AI, definitely NPU will be much more strong. I mean, you can think it this way. If you want using the VHS to like store the older video I have been watching in my life, that would be big, right? But it's doable in a small MP3 dongle, which you can carry to everywhere. The same thing for NPU. NPU is much tiny, and actually it's a one die size, so quite tiny. So power consumption is lower, which is the best hardware for edge AI application. For example, wearable device is impossible using the GPU because it's hot and also area is big, right?
Does that mean also that businesses that want to use your products, for example, can build their own AI applications without having to rely on, say, OpenAI and going somewhere else?
You can think it this way. We can make the OpenAI quite small and on your device. Right now, our cell phone is much power than the data center when I was a kid, right? It's because the game changer Qualcomm's chip made it happen, right? Today, your PC, your laptop is even more powerful than 3 decades supercomputer. The same thing, right now, our imagination for ChatGPT must in the cloud is because we were limited in the older architecture like GPU or CPU. But once you're using the game changer technology, you pretty much can build your own personal ChatGPT and your company's own ChatGPT, which can be like a high privacy and also low latency, which will make our life more close to the science fiction.
You mentioned some of those key partnerships you already have in place. At Naver, for instance, you said, I know you've got Foxconn, for instance, Qualcomm, but which geographies are you targeting in particular?
Yeah, our major income comes from Korea, Japan, and US, and also some Middle East recently, because we have a new site set out in Saudi Arabia just a couple of months ago. So, and we also have some China customers, but more limited in the consumer base. For example, home appliance giant. And like Gree is one of our customers. It's the largest air conditioner company in over the world. And in more sensitive area, normally surveillance or even military defense related, we are more in the western side.
Just on that topic of China, do you see any competitors developing in this space? Because we know, and we've just been discussing, for instance, that push that they have for self-sufficiency or self-reliancy. How secure is your type of technology in China right now against competitors?
I will say we are pioneer, and many of the core patents owned by us. We can write a textbook, means everything written in the textbook is Kneron own patent, right? But I think I will say China is very aggressive because they believe AI is the kind of geographic competition between political competition between U.S. and China. And they say they believe that they are a little bit behind, no matter it's the CPU era or GPU era. So in NPU era, they are definitely more aggressive than any time before. But we still believe that some core 0 to 1's innovation still more in our side, in the Western side.
We were talking to DeepX just earlier today, and they focus on device chips as well. And they were describing their products as sort of complementing what Nvidia does, for example. How should we see your products in comparison to these giants out there?
Actually, for us, right, there's some giants even partner with us. For example, Qualcomm is one of our investors. And Qualcomm, their RB1, RB2, we have a joint announcement a couple years ago. So the RB1, RB2, and even the RB5 focus on drone and robot or AIoT application, also partner with Miran. So I would say some big giant, they choose to work with us. And some giant is even our customers. We just have a pretty big customer. I think their market cap is global top 5. It's using us. But anyway, it's going to be released soon. But I would say I will say we really believe that we are the #1 or the king in the AGI or NPU era.
And given that status that you're giving yourself as well, what's the focus then for the listing plans, and what's the timeline for that? Would you consider maybe also making yourself an acquisition target?
I will say that no matter, every company dream to become an IPO, right? I mean, for us, it's also the same thing. But we want to have meaningful IPO, which I believe that we must have a solid customer base and solid volume and have a great industry influence. Like what I said, I have a very big customer, no matter it's Hanwha, NHN, or even Panasonic, Garmin, etc. But we are waiting for big giants to prove that we are the #1, which is going to be happen in like Q2 or Q3 this year. We already designed in, but it's waiting for announcement time. Then after that, I believe we are ready for the meaning for become the next stable IPO company.
All right, well, we're looking forward to finding out who exactly this customer is that you're under NDA with. But Albert, thanks very much for joining us this morning. That was Albert Liu there, the Kneron CEO from CES. Avril, we'll hand it back to you.
Good stuff, guys. Sherian and Annabelle Jewelers in Las Vegas. We have more ahead on the Asia trade. This is Bloomberg. Take another look at how oil prices are faring as geopolitical risk premium gets built back in to the markets given developments surrounding Venezuela and the risk around Russia and Iran as well. Oil majors doing well. We'll continue tracking that. This is Bloomberg. Shares of ZAI gained in their Hong Kong debut and became the first major Chinese generative AI startup to go public. The stock closed 13% higher on Thursday, climbing after a muted open. Meantime, Minimax, another one of China's largest generative AI startups, is set to begin trading in Hong Kong today after an IPO that raised $619 million. For more, Bloomberg's Stephen Angle joins us from Hong Kong. So, Steve, what sort of trading debut are we expecting following its peers splashing onto the scene, and some called it a lackluster start to trading?
Well, it might be called a lackluster start yesterday for ZAI, 13% up. But the demand also, of course, has been pretty high, and the interest has been pretty high for these generative AI companies like ZAI and also Minimax, which will have its debut here on the Hong Kong Exchange in about 1 hour's time. It is a chance for the lower cost model. They don't have a big track record of revenue or even profitability. That's still down the road. But it's the opportunity for the large language model software companies like Minimax to show or at least provide a litmus test for the longevity and investor interest going forward. Because, again, these are open source platforms. They're much lower cost, lower revenue than the bigger players in the United States. And, of course, there's been a lot of questions about whether there is a bubble in the amount of money that is put towards the industry and whether that return on investment is going to be there. So we're going to dig deep into the viability going forward after what has been a brutal price war for the large language model providers in China because of that low-cost model, low-spending model. We have to kind of see what the viability is going to be going forward. But there's no doubt there's tons of interest. This is a stock code 100 on the Hong Kong Exchange, by the way, that had 1,800 times oversubscribed on the retail tranche and 70 times oversubscribed for the institutional tranche.
Yeah, to your point, it's drawn a lot of interest from long-only investors. But talk to us about this digging deep in terms of that path to profitability. What's expected here?
Yeah, so the numbers are not overwhelming. In 2024, Minimax had $35 million in stated revenue. And in the first 9 months of this year, it was a loss of about $180 million, adjusted loss. So they are not profitable. They are not necessarily making a lot of revenue, but they're going to take the proceeds of this IPO, $619 million US raised, and put it into more R&D, research and development, into more models. This is a multimodal operation business model that started in audio and video and then going into the large language model phase. So what they want to see is how many different multimodal platforms that they can offer and take this lower cost model abroad. That's something we're going to be talking to with the COO and co-founder coming up in about an hour and a half time. What is the overseas expansion priorities to take this lower cost model abroad?
Exciting day, Steve. Thanks so much, our Bloomberg correspondent, Stephen Engel, for us. And stay tuned, as Steve mentioned, that exclusive conversation with Minimax co-founder and COO Ye Yiyun, live from the Hong Kong Exchange as we track the company's trading debut that's later on the China show. Now on to some other corporate stories we're tracking. Paramount Skydance has reaffirmed its hostile offer to buy Warner Brothers Discovery, insisting its bid is superior to the one from Netflix. And this is partly because the Netflix deal plans to hand investors stock in a cable TV spin-off that Paramount deems worthless. Paramount points to the poor market debut of Comcast's cable spin-off Versant. General Motors is taking a fresh $6 billion hit as it scales back EV and battery production, and that brings total EV-related write-downs to $7.6 billion. A new regulatory filing shows the company is recording all of these charges in its fourth quarter results. Reliance Industries says it'll consider buying Venezuelan oil, but is still awaiting clarity on whether non-U.S. buyers will have access. Reliance has been India's top buyer of Venezuelan crude. Sources say Reliance is among major oil firms invited to meet President Trump as the administration pushes to rebuild Venezuela's energy sector. Revolution Medicines jumped in after hours, trading on a report that Merck is in talks to buy the cancer drug maker. The Financial Times says a price of as much as $32 billion is being discussed, although a deal has not been finalized. The two sides may still be weeks away from an agreement, and other suitors are also interested in buying Revolution. Now, speaking of deal making, take a look at how Rio Tinto shares are falling in Australia as talks resume with Glencore on combining to form the world's biggest miner. Our managing editor for Asia Energy and Commodities, Clara Ferreira-Marquez, joins us now for more. So, Clara, this is a resumption of talks that we're hearing about. Put things in perspective for us in terms of what this might mean.
So it's been a big couple of years for deal making. Last year was obviously very, very busy, and it looks like we're starting off strong again this year with talks again between Rio and Glencore. They were talking back in 2024. At that point, it was Glencore making a move for Rio. It looks like this time it might be the reverse. They're a very obvious combination. Rio is in need, or was interested, or has been interested in iron ore, and Glencore has a lot better copper assets, really, than Rio does. So there's a good sort of copper story. There's potentially a good iron ore story. In Rio, there are a few big problems that would include coal, what they do with Glencore's coal assets, and the dual-listed structure may cause a few headaches for the bankers working on this deal.
Yeah, so how has Glencore been priming itself for this potential deal? Because, to your point, they see a lot of these synergies potentially.
Yes, Glencore is not in as strong a position as it was probably back in 2024. I think there's been a lot of speculation on the future of the company. So some kind of combination which could yield one, it could yield more than one company, depending on how they structure it, is a very interesting potential outcome under, remember, the leadership of Gary Nagle, no longer Ivan Glasenberg, who was perhaps much more wedded to the future of the company as an independent.
How are we also seeing, the backdrop of the way commodities, particularly copper,
absolutely,
was soaring, and how that is really drawing this interest from these miners?
Well, that certainly puts the heat on the board, right? You have copper at 13,000, even more. It really accelerates the need to acquire a copper pipeline that will carry you into the future. Copper assets are few and far between, especially large copper mines. So that really is the driving force behind a lot of this combination, a lot of these combinations that we've seen over the last few years.
Clara, thanks so much for putting things in perspective for us. Bloomberg's Clara Ferreira-Marquez. Let's take a look at how some of these Japanese stocks are faring as well. Fast Retail, this is, of course, the company behind the very popular Japanese brand Uniqlo, and this is a record strong quarter we're seeing. It's also upping its outlook, higher outlook, thanks to robust quarterly results and this expected recovery in China. So that's the surge you're seeing on the price of Fast Retailing, 8% higher. More ahead on the Asia trade. This is Bloomberg. Cambodia's Deputy Prime Minister says the country wants to lower the temperature in its dispute with Thailand to protect a fragile ceasefire. Speaking exclusively to Bloomberg, Sun Chantol also pushed back against Bangkok's assertions that the clash was part of a battle against scam centers operating across the border.
Well, the ceasefire is still fragile, but I want to reassure you that Cambodia committed to the ceasefire. Cambodia need peace, and I'm sure Thailand also need peace in order to build our country, our respective country, for the benefit of our respective citizens. So we are committed to resolve the conflict through a peaceful means. We have different mechanisms in place. We have GBC, General Border Committee. We have JBC, Joint Boundary Commission. Cambodia and Thailand will be neighbor for next thousands of years. So let's work together to develop our economy for the benefit of our people, for the benefit of ASEAN. We cannot have a conflict, or else we lose the credibility of ASEAN. So I hope And I wish that this conflict can be resolved peacefully, sooner rather than later. And I'd like to take this opportunity also that we need to lower the temperature. The Cambodian citizen, also the Thai citizen, let the government work together to find a peaceful resolution. Do not add fuel to the fire.
Thailand has kind of framed the recent strikes as an assault on scam centers. And I wonder if Cambodia sees any truth in that.
You cannot use one issue, the scam, to invade the country. That's my own opinion. If the scam center happened in Cambodia territory, the government of Cambodia has the obligation, the right, sovereign right, to resolve them themselves. We don't need the third country to come to resolve the scam center in Cambodia. Cambodia authority arrested and deported Chen Xi, the head of Prince Group, to China. It took us a while to investigate, to collect all the information, and we took action. So when we have all the evidence, we took action according to the law of the land.
Last year in April, Cambodia was among the top of the list of President Trump's tariff rates. It was very high, over 40%. You led the negotiations for Cambodia. The rate is now 19%, much lower. Now that a few months have gone by, I do wonder what has been the economic impact of those levies so far.
2 days after the announcement, our Prime Minister sent a letter to President Trump, offered to discuss, to negotiate in good faith the trade between Cambodia and the U.S. I believe that Cambodia was the first country that concluded a comprehensive reciprocal trade agreement between Cambodia and the U.S. Now, we are continue to discuss with USTR regarding certain sector that we believe should receive a lower reciprocal tariff. For example, the garment, the textile, the footwear, travel goods that employs nearly 1 million workers, predominantly women. So we asked USTR to review those important sectors for Cambodia for potentially reducing or zero out those sectors. It's important for Cambodia.
There's lots of investment across Southeast Asia from China, and I understand Cambodia is a beneficiary of that as well. Has there been any noticeable kind of uptick of investment from China as a result of these tariffs? The
average, I would say, around 50% of our FDI come from China. We are trying to diversify our portfolio by going to different countries. I went to Europe a few times. I went to the US a few times. I went to Japan. I went to Korea. I went to Australia and other countries. Try to promote investment from other countries to Cambodia. Having said that, our law on investment does not discriminate against any investor. As long as they respect rule, regulation, law of the land, we review it and we approve the project. So I take this opportunity to encourage companies from the US, from Europe, from around the world to consider Cambodia as a place to invest.
Cambodia's Deputy Prime Minister Sun Chantal speaking to Bloomberg's Philip Haymans. The top global headlines we're following. The House has also voted to uphold President Trump's vetoes of two major bills, despite concerns among some lawmakers that they were acts of political retribution. Both bills had broad bipartisan support when they passed the House last year. One was sponsored by Colorado Republican Lauren Boebert, formerly a staunch Trump ally, who helped force a vote to release the Epstein files. A group of House Republicans has broken with party lawmakers, or leaders, I should say, to join Democrats in extending expired Obamacare subsidies. The House passed the 3-year extension 230 to 196. The measure faces steep Republican opposition in the Senate, though defectors hope it pressures lawmakers towards a bipartisan compromise. Iran's president has ordered security forces not to target peaceful protesters in a bid to defuse violent unrest that activists say has left at least 36 dead. Demonstrators have taken to the streets nationwide for more than a week after the local currency crashed to a record low. Hardline officials have accused foreign adversaries such as the US and Israel of fueling the unrest. Venezuela's government says it plans to free some local and foreign prisoners after the U.S. capture of President Nicolas Maduro. The National Assembly leader announced the plan on state television, describing it as a peace gesture. It's not clear how many prisoners will be released. Spain says 5 of its citizens are among those to be freed. White House trade advisor Peter Navarro says U.S. industrial breakthroughs will eliminate China's market dominance in rare earths. Beijing's efforts to withhold supplies of critical minerals last year helped fuel a trade war with the U.S. But Navarro told us that American innovation will boost domestic production.
It is a very difficult one. China has been flexing its muscles now in Europe, in India, in the United States, saying basically, we're going to do what we want, and if you try to stop us, we're going to take away your critical minerals, because they think they have a monopoly on it. But that's just a matter of time. American innovation is going to quickly wipe away that innovation, that threat, that weaponization.
And you can listen to the full conversation between Michelle Hussein and Peter Navarro by searching for The Michelle Hussein Show wherever you get your podcasts. Now, certainly the tensions between the U.S. and China, rare earths and access to critical minerals being a flashpoint has turned so much attention on this very material. And we're seeing in Australia, take a look at this stock, Energy Transition Minerals. Some have already pointed out this is a stock that's gained already more than 80% so far this year. And of course, it's garnered renewed attention because this is a company who has a Greenland project related to rare earths. So a lot of attention there on materials. More ahead on the Asia trade. This is Bloomberg. Apollo Global Management President Jim Zelter says while it's becoming more challenging to make investments given growing geopolitical risks, the long-term trend is still positive. He told us exclusively why he's staying confident in the U.S. economy.
The gauntlet for approving investments at Apollo has gotten higher and higher over the last year or so as we see an environment that down the fairway, I'll use a golf analogy, down the fairway, you've got a lot of great things going on. Massive CapEx cycle, good economic growth, consumer in solid shape, a variety of great attributes. That being said, the rough, where there's lots of challenges, between geopolitics, between the concern about inflation, between the concern about the return of invested capital in AI, there's a variety of left tail items that have certainly grown in stature. As I listen to some of the macro commentary here, I think there's a great deal of humility about the macro view of how the predictions, as I've said here many times, we sat here after SVB, we all thought massive capital slowdown in spending and credit crisis. The U.S. economy really was massively resilient. You guys talked earlier about what's going on with the deficit. I think it's a little bit, it's the economy stupid. The U.S. economy, people just don't want to short the great momentum of what's going on. And we have an administration that's very politically savvy about populist topics. He's been very responsive. But just back to the question you had, we're putting money to work. This week was a busy week. We announced $6 billion of deals, of transactions, all great companies. Again, we're leaning into larger companies that are part of the global industrial renaissance. One with Brad Jacobs, a 35-year winner in the building product space. The second one with Russell Investments, really simplifying their capital structure. And then the last transaction was very interesting, actually. It was for Valor XAI. It was really a sale leaseback on a massive amount, $5 billion of Nvidia chips. So all three really interesting transactions, but really well structured, downside risk. And I think that's our view right now. We want to be investing capital, but you got to acknowledge you can wake up on a Saturday morning and see us with activities around the globe that really enhances the tail risk of geopolitics. You can get a stroke of the pen announcement yesterday with regard to housing. And so I think you have to be very, very careful about how you invest long term at scale.
To extend the analogy, though, to your point, the fairway is getting narrower, the rough is getting deeper. In the last few years, it's not been that way. Allocate to risk and you'll perform, you'll do well. Well, it feels like a tougher environment.
The analogy for golf, for those who play a lot of golf, is we're at the U.S. Open. The U.S. Open is known for tight fairways and really punitive rough. And if you cape in the fairway, you're going to be a great victor and you're going to have great success. I think there's going to be, as last year will remind us, you can have some bumps in the road during the course of the year that definitely change the trajectory on liquidity, on momentum, on risk appetite. So, but I think the long-term trend is quite positive.
Apollo Global Management President Jim Zelter speaking exclusively with Bloomberg's Jonathan Ferro. Now, against the backdrop of geopolitics becoming a certainty, the theme of escalation that some of our guests have been sharing with us, you are seeing these defense stocks, the sure play this morning in South Korea. These are the top gainers on the Kospi. Going the other direction, it's the chips. The chips are down. And of course, this is against the backdrop of that U.S. defense stock rally that we saw overnight. Already with the Trump administration, the president himself calling for the upping of the defense budget to a record potentially. And with these developments in Venezuela, these continued concerns that U.S. involvement in the region might come for a while longer yet. That's it from the Asia Trade. Our markets coverage continues. This is Bloomberg.